Good morning and welcome to the Wilson Center. I'll talk for a second so people can get seated. We're immensely pleased to have Dr. Pedro Aspe with us today, one of Mexico's and one of the world's really leading economic thinkers. As you will see, he is a powerful thinker on a range of global issues, and he's going to walk us through them, but also come back to Mexico and where Mexico fits in all of this. But we're extremely pleased to have him here. For a long time, we've wanted him to join us on this, and we're pleased he was able to make time in an incredibly busy schedule. Today, I'm not the one who will introduce him, but Jack Rogosinski. So let me just say how glad we are to have Dr. Aspe with us and turn it over to Dr. Jack Rogosinski, who is the general manager, the general manager at the Inter-American Investment Corporation. For those who don't know, it is the IFC of the Inter-American Development Bank. A large and important organization much more efficient.
Much more efficient.
Yes.
Yes. No, if I can make it, como se llama un advertisement, ¿verdad?
Yes. Anyway. Former official of the Finance Ministry of Mexico, PhD from the University of Colorado. And Jack, great to have you here. Thanks for doing this. And thanks for introducing Pedro Aspe and leading today's discussion. This is on the record.
So, again, first, I think we're very privileged to have one of the, I would say, globally economic thinkers at this point. I would say one of the top ones. And that can be easily proven, but I'm not going to go through the whole history because he's the one that's going to I want him to converse with you more than I do. But just let me give you some of where he is today. The majority maybe know, but just let me remind you. Today he is a co-chairman of Evercore Partners. It's a leading investment banker of the U.S., banking of the U.S. Now it's number 8, I think, in the U.S., number 7. 7. So it has been growing from a boutique to, a very large investment banking. He started in 1996 Protego, and then he joined forces with Evercore. And of course, he also used to teach at ITAM, one of the leading professors at ITAM. You don't teach anymore, no?
One semester, yes, one no.
Semester, no. Okay. And I guess the semester when he teaches, the people come out from that year are better qualified. But anyway, and of course he was secretary of Hacienda, as all of you know. And he also, he graduated from MIT. He's a member of the visiting committee of the Department of Economics in MIT. And of course he sits in different boards, including CIDE and McGraw-Hill, between others. I'm not going to go through the whole list. And of course he was my boss at one point. And I think today he's going to be talking to us about his, vision or view of what's happening around the world, the macroeconomic situation, in the world, and how that is going to affect or help Mexico. So I would like, Pedro, please.
Thank you very much, Jack. I'm delighted to be here. Andrew told me last year, he asked me about how I was seen, I think it was like a year ago, when you said, how do you see the economy doing? And so I talked a little bit about Europe and a little bit about the U.S., and then I said, well, given this fact, that's how I see that the Mexican economy will evolve, because we depend a lot on foreign events. And that's something that we have to recognize and we have to manage. When we opened the economy 25 years ago, we knew that this was going to happen, and it has happened. And so the Mexican economy is a very open economy with the big percentages on trade to GDP and financial flows to GDP. So we have to learn about the rest of the world and how it affects Mexico. So I said to Andrew, I don't know if it is interesting, my view from, now I am in the private sector. I don't know if it is interesting, because usually you invite people who have more a public policy view. And he said, no. It will be good if you tell us as you see it, how you see it as a private investment banker working in Mexico and in the rest of the world. How do you see it? So what I'm going to use is some version of, and we will give you a copy of the presentation, of course, so for you to have, of how we see the world. It's not Pedro Aspe, it's the Evercore Mexico team. We are 6 partners in Mexico, and all of them have a really excellent. We are all lucky to have an excellent education, and out of the 7 partners of Evercore Mexico, 5 are U.S. trained, and the other 2, one is UK and Spain trained. So, So let me start then by saying that I'm really, really delighted to be here. I hope it's not too boring for you. I'm going to take half an hour of presentation at the most, 25 minutes, and then of course we will stop for questions, which will be more interesting. Okay, I'm going to tell you a little bit of how I see Europe. And when I say I, is my team. No, this is a team effort. Then I will talk a little bit about China and emerging markets. Then I will speak lots more about the U.S. The U.S. interaction. I wrote my thesis, my PhD thesis, with Franco Modigliani 30 years ago. I wrote that thesis. The thesis topic title was the transmission mechanism between the U.S. and Mexico. So I was always worried about how you transmit shocks, how you transmit growth, good things, bad things, etc. Then on the 4th point, I will talk about how the international sphere affects Mexico, and then a couple of final remarks. Let me go straight to Europe. Well, everybody has a view on this. Let me just tell you how I see it from the tropics. I think the monetary union was born with clearly original structural mistakes. And let me use one explanation. There are many possible explanations. Let me tell you why, and especially for the U.S. audience, I want to bring this. Imagine that we think, okay, let's imagine that you have a monetary union. Which one has survived 100, 200, almost 300 years? And how it was built? And you say, well, in the original time, there were some colonies that they wanted to be together and to create a nation. And these colonies said, okay, we want to have only one currency, the dollar. We want to have one army, not a colony army. It has to be one federal army, one army. And we want to have movement of capital and labor across the colonies, etc., etc., etc. If you go back to the Jefferson papers, which the first time I read them, it was many, many years ago under the recommendation of Manuel Sarismier, who said, if you really want to learn about nation building and the economics of nation building, read the Federalist Papers. I glanced at the first time there, then I had the luck. In the PhD in economics in the US, you are forced to take 1 year of economic history. And I was lucky to have as teacher Charles Kindleberger. And Charles Kindleberger spent 6 months on the creation of the US and 6 months on the Great Depression. And he said, if you know these 2 events, you learn a lot. And let me remind you that in the Federalist Papers, then Jefferson, who was of course the leading figure, says, okay, and we're going to have one federal government, and the federal government could issue debt. And then in the discussions, you see that the states could also issue debt, and that was the big discussion. And here appears a guy who, when you go to the US Treasury, is in the entrance, the statue of Hamilton. And Hamilton says, no way. The only way for this monetary union to survive is that the state and local governments ought to have balanced budget. Let us not forget that. Of all the states in the union today, all except Vermont, I think, all of them have a balanced budget article. I see faces that are surprised. Well, that's how it was built, and that's why the state and local governments can have a temporary deficit, but they will have to correct it in the following 1 or 2 years. They have some states have a 2-year period to adjust, some have only 1. But the very interesting thing is that that was in the creation of the US. Okay, now let's go back to Europe. And they say, okay, you don't have to have a fiscal deficit. You don't have to have a fiscal equilibrium. You can have a small deficit. Oh, my God. That's an original problem. And then they have Maastricht, and they say, well, but it has to be small. It has to be up to 3% of GNP. You remember, I'm not going to repeat this. This is the original sin. This is the original problem. Okay. So now what do they need? They need fiscal consolidation. That's what Germany says. Fiscal consolidation. Are they right? Yes, that's one. But it's not the only thing where they have problems. They have a second problem, which is the lack of capitalization of the European banks. We thought that in 2008, with the US crisis and the US banking crisis, the Europeans have corrected the problems. Now we know they didn't. And so there is a lack of capitalization. And third, and it's the things that nobody talks about, and I will want to talk a little bit, they need drastic, and I am a Latin American, drastic corrections of high unit labor costs in some countries, and we'll talk about it, because they lack competitiveness relative to Germany. So no wonder at the present euro level, 131 per dollar, at the present euro level, Germany has a trade surplus, and all the other countries have a huge deficit. That's the competitiveness problems, and I'm going to talk about that. I hope I'm clear, and if not in the questions, I will try to. Okay, so let us go. Europe seemed like it was going well in the sense that they were growing more or less, at the same rates. But look at the divergence of rates now. So something that was created to promote European integration has put it in danger. Look, that's Germany going 30%, and that's Italy going -20 relative to 1990. Okay. So in the beginning, of course, people didn't pay attention to this original sin problem of each individual country to have a fiscal deficit, and they value a bond from Spain very similar to a bond from Italy, very similar to the one in Germany. Not anymore. Okay. And then something that we Latin Americans have learned the hard way. You never have a big percentage of the debt coming due in one single year. The Mexican government, the Brazilians, the Peruvians, the Colombians, the Costa Ricans, everybody learned the lesson. Well, no, the Europeans. Look, Italy, 25% of the total debt is coming due this year. He said, yeah, I don't believe it. 25? And look, Greece, 20. France, Portugal, Spain. Okay, so...
is this because we have a video connection here?
Okay.
Make sure they can hear you.
So I just want to highlight this, which for a Latin American is really surprising. Okay. So the central bank has had to step up, the European Central Bank, to provide liquidity. And look, the banks. This is the US of multiple of GDP. This is the US, less than 1 time. Look, Ireland, 7 times. No wonder. The UK, etc., etc. Look, Spain. Okay, Spain, 3 times. Okay. So obviously they have really sizable liabilities. And so fiscal consolidation is one thing, capitalization of the banks is another thing, but look at the third one, which is unit labor cost. I put 2,000 equal to 100, and I look. And remember what's unit labor cost? We economists use unit labor cost is wage rates corrected by productivity. So, for instance, if you have a horizontal, a constant unit labor cost like Germany, look, Germany, it means that the wage increments that the German workers are getting are more or less equal to productivity growth. So if productivity growth grows in Germany 4% and you give a wage increment of 4%, unit labor costs remain constant. Okay? Okay. Germany has had a constant unit labor cost in euros in the last 10 years. Well, look, Greece is 40% above. 40% above Germany. Okay, this is tough. The Irish, which were the first ones to start correcting, went almost 35, and they have started correction. It's the only country that has started diminishing, and look how much they are suffering. So Ireland has gone from 138 to 120, okay, and it's coming down. And of course, that's a cut in the standard of living because you went way up beyond your means. And now they have to cut. And people do not like to talk about that because this is the ugly stuff where people are going to suffer. Okay? But it's inevitable. Okay? Okay. So let me go now. Finally, look at the liabilities. Yes, Germany has a point that the fiscal deficit, the public debt, grew a lot. Yes, it's true. It went from 6 trillion to 9 trillion. Yes, it's true. But nothing as compared to the European banks. So they have two problems. They have to lower the liabilities of the banks, capitalize the banks, and then have to do the fiscal consolidation, and then have to reduce the unit labor cost. Okay, I want to remind you that from a Latin American perspective, any economist from Colombia or Brazil say, yes, we understand perfectly well this because we have gone through these things. Okay, very fast, China. China got really important inflation rate, as you know. It went, the inflation rate went from negative in the crisis to 6, but they have managed to reverse it from 6.5 to 4. So the big question is, will they do a soft landing? It seems that they are doing that, but I want to highlight something to you. This is the European Bank claims on Asia, excluding Japan. So where did all the liabilities of the European banks went? They went to Asia. And they're pulling back. They're pulling off Asia. And that's creating a lot of problems in China, etc. But look, they haven't put, up to December 2011, look, up. Okay, so just here they have $1 trillion. Okay. Okay, so let me finally look at this, and this is going to be very relevant for what I talked about Mexico. China had the unit labor cost from 2000 to 2005 growing, but very slightly. But from 2005 to 2010, it has gone to the roof. Why? They are having, from 2005 on average, 25% wage increment in dollars per annum. That's something that we Latin Americans know. For instance, if you ask me, Pedro, Evercore Mexico, if you start giving 25% wage increments in your company, how long it will take the company to go busted? I can answer that, 3 years. I will go bankrupt, okay? So you cannot give 25% increments in dollars, and this is something that we are going to watch, and I will come back to that. Let me go. So hopefully they will do it. Now, Latin America, the big thing is, of course, everybody's exporting commodities, Brazil is the perfect example, but Peru too, Colombia too, and Mexico too, because oil is another commodity. Okay, so we are growing very well, yes, but commodity prices are huge, and we have had a nice ride with the commodity prices. Okay, that's cyclical, and it's nothing to be surprised. Okay, now what is interesting is that the going forward, the bulk of the growth of the world will come from emerging markets. And this is how people see it. At the margin, the growth in income per capita going forward, 75% of the world growth will come from emerging markets. And this is the big difference. And the big difference between 2010, where developed markets are double the size, more than double the size of emerging markets, and this will be the big change going forward. Okay, let me go fast to the US. The US has an incredible, dynamic private sector without debt, has no debt, innovative, with cash, and competitive. So the private sector of the US is really healthy, really healthy. And it has, a superb, I will say, performance. Okay, let's go to the second. Disciple families that they have been putting down the debt strongly in the last few years. Part of it is tightening of the belt. That's like 40%. 60% is the non-recourse on mortgages and walking away from your debt. As you know, in these places where you have non-recourse, in these states inside the US, where you have the non-recourse of mortgages, if the mortgage is worth more than your home, you just walk away and leave the house, and that's a deleverage for the families. So it's part and part. Now, look at the third. Federal states have reduced the fiscal deficits and the debt. Is that done? 85% is done. So it's still something to do, to go. But the state and local problems are there, are feeling squeezed, they are suffering, but they have a balanced budget amendment, and they have to comply with that. And that's the rule of law, and they will comply with that. So where is the problem? A big federal government with a fiscal deficit out of proportion, with growing debt, and a highly divided political class that has not managed to have collaboration. Okay, let's go next. So let us see. I like this graph very much. This is the long-term household debt in the US. It's going up. And you see in the 60s, and then in the 70s, then again. But really, the 2005, 2009 was an outlier. I mean, clearly was an outlier. And we see they have returned half of the way. The reduction is 11. You have another 11 to go. So 2 to 3 years more this year, and one more, and you will be on the long-term trend. And this has been done, rough numbers, half and half, by repudiating mortgages, and half by tightening. Okay, so the U.S. families are on track to be on the long-term trend. And you see it here as a percentages of disposable income. It has gone from 19% at the peak to 16% and going down. The banks, they had a big leverage, and of course it has come down. So two sectors that you see. The only one, by the way, the private sector, the lowest debt since 1970. The private sector in the US, the lowest debt since 1970. It's really healthy. So where is the problem? The problem is clearly in the federal government, which has these percentages of debt of around 70% of GDP in net debt, which is something beyond history in the US. And this is clearly an outlier, and clearly it's a problem. If you want to see it in gross terms, it's comparable only to 1944. just before the invasion of Normandy. But that was a war, etc., World War II, etc. So clearly it's an outlier. And foreign holdings of U.S. debt is almost 50%, and the Fed has stepped up buying. So between the foreigners and the Fed, you have 2/3 of the debt of the U.S. government. Okay. Now, that's the scenario. Now, I better turn to Mexico fast because I have 10 minutes to go. So, what happens to Mexico in 2009? Sorry. We lost 850,000 jobs. Remember, I like round figures. And remember, the U.S. is 1/10, Mexico is 1/10 of the U.S. So how many jobs Mexico lost in 2009? 850,000. Is this? You see it here, from here to here, 850,000. Okay, how much jobs the U.S. lost? 8.7 million. That's the 1 to 10. Now, what I'm going to explain you is that Mexico has recovered all the 850,000, and we have added 700,000 more jobs. The U.S., out of the 8 million, has only recovered 1/4 of that, 2 million. And that's what is strange. Let me put it this way. Look, the manufacturing, well, this is the production. The U.S. falls, and Mexico has one good quarter when the U.S. falls, but only one. Boom, we come back here. No, the correlation is complete. But look the recovery. Mexico is way above the original point. The U.S. is still 5% below the January 2007. That was the date when the National Bureau of Economic Research said that the recession started. Okay? Okay, we'll look now in terms of exports. Of course, our exports fell dramatically, but they have recovered well. They are 25% above the original. Okay, if you want to put the employment, I put it here, the U.S. and Mexico, to facilitate to you. So I put January 2007, that's the date of the National Bureau of Economic Research, and that's equal to 100. The U.S. comes down and recovers a little bit. We come down with the U.S., but we have recovered. We are now 13% above the original. You are still 4% above the original. That's the gap that is really surprising. Now, if you want to look at in manufacturing, the U.S. goes down, Mexico goes down, and we are starting to recover the original, but the U.S. is almost 18 points below. Okay? So that's really what it says. In 2012, 600 in Mexico, 1.6 million in the U.S., but the equivalent figure should have been 6 million, okay, because of the size of the economies. Okay, very fast, the last 3 years we have had huge oil prices, and of course the government has a lot of income, and we have spent everything, no? As usual. You know, the last time we had an oil boom was in the late 70s, early 80s, and we spent it all and much. Well, now we are not increasing the debt, but we have a fiscal deficit of around 2.5%, with oil prices last year 110. So we really spent all. That's the good news is that the oil prices are high. The bad news is that we always spend them. And we do not use, like Norway or Chile, the stabilization fund not to do it. It's a pity. Okay, very fast. When you compare Mexico to Latin America, in which ways we have differed completely in the treatment of the exchange rate? Everybody, I put here Lehman, 15th of September at night, the Lehman night. Everybody let loose the exchange rates. And Mexico devalued 45%, Brazil 40%, everybody. Okay, and then everybody revalued relative to the dollar around 15%, except one country, Mexico. And this is because Mexico is lots more open to the U.S., We have lost more open trade to the U.S., and we saw that this was not a cyclical thing. This was a structural thing. And the Banco de Mexico has managed extremely well the exchange rate, not to revalue completely. And so we have had a big difference relative to the rest of Latin America. By the way, if you take automobile exports to the U.S. last year, were 15% up. If you look exports of automobiles to rest of Latin America, 60% up. No wonder. Okay? Okay, going fast. Why this movement? It's Europe. It has nothing to do with Mexico. So let me try to convince you that every time that Europe gets into trouble, when they really get into trouble, then what happens? The euro devalues, the dollar revalues, and everybody comes to the US. Why? Because this is the safe haven. So if you are in Mexico and Europe has trouble, what happens to the exchange rate? It goes from 11 to 14. As easy as that. Why? Because everybody comes to the US. And you will say, well, Mexico is an emerging market. What happens to the best managed developed economy of the continent? Canada. Extremely well managed. They didn't have a crisis. They didn't have a banking crisis. They have managed extremely well. They have very low debt, low ratios of debt to GNP. The Canadians have done a really wonderful job. Well, look the Canadian dollar and the peso. They move together. Why? Because when Europe gets into trouble, the US is king. No? The US, everybody comes here, and the dollar, Canadian dollar depreciates, and the peso depreciates. Okay? So this is very important because, look, I am in the private sector as an entrepreneur. So I have to talk to my clients, and I have to talk to the companies where we invest, and I have to say, Mr. Aspe, what's going to be the dollar? And I say, anything between 11 and 15, and people say, well, my God, this guy is really dumb, no? That we knew that it could be between 11 and 15. But the only thing I'm trying to tell you is, this is why we cannot forecast, because I cannot forecast what's going to happen with the Greek negotiations as we speak. I have not a clue. Okay? Let's go next so that I finish. Let me finish with two things. And I want to make two things that make me optimistic for the future. And I'm talking about economic terms, which is what they asked me to talk about. The first one is unit labor cost relative to China. This is the Chinese unit labor cost. This is the Mexican Chinese. Do you see the unit labor cost of Mexico? Very, very similar, like the one in Germany, in the sense that they have remained constant in the last 10 years. Okay, our unit labor costs are crossing, and we should be now cheaper than China. So from the manufacturing, light manufacturing, I'm being careful, light manufacturing, China is doing extremely good job in high value added. But in light manufacturing, we have gained a lot of competitiveness. And also, if you look at transportation cost, to shift a container from Monterrey to Chicago takes 4 days, and it costs $3,000. From Shanghai to Chicago takes 22 days, and it costs double. So because transportation cost plus the unit labor cost, Mexico, after suffering from the entrance of China in 2000, finally looks extremely competitive. And this is a really good news. And if you see, our exports remain in clear 2 digits, which is another proof of the competitiveness. We have come down with the slowdown of the US recovery, it's true, but we are still in 2 digits. So this makes me very optimistic for the future, and I can tell you examples of companies that are shifting production from Asia to Mexico. And in light manufacturing, clearly we have a competitive edge. Now, the second big reason is the 2010 census. When the National Institute of Statistics issued the census data, they invited some people, and they invited me because I was the founder of the National Institute, the day that they put the data to the public. And we had, after that, we had a meeting with the demographers of INEGI. Extremely interesting. There's one piece of data that all of you that are interested in Mexico should look at, which is finally the fertility rates of women in Mexico not only fell, they dropped to the levels that all the demographers have been, is coming, and they never come. It was very slowly. Finally, it is there. So what you see is that the total fertility rate has really fallen down, and that will give us a dependency ratio in the next 2 decades, 2010, 2013, where you have the lowest dependency ratio ever. So this is what we call the demographic bonus, which everybody talks about. So the average family in Mexico, which only 30 years ago was 4 children, has 1.7. So it has happened. It's already there. And the big thing, all the demographers in the world are very interested, and they have a big conference coming into Mexico City, is why finally the fertility rates of women in Mexico fell. By the way, and I stop here, this will mean that migration, international migration to the US, is dropping like that. And I was in Stanford 2 weeks ago talking about that, and one of the professors said, and how come the US Congress is up in arms with migration? Oh, because they are always 10 to 15 years late. No? And okay, so let me just, so 2010, 12 will be great of enormous uncertainty. We have, I'm talking about economic uncertainty. The bulk of the uncertainty will come from Europe. China, hopefully, they are able to do a soft landing. And both the turbulence coming from Europe will depreciate all our currencies. And so we will be able to grow around 4%, give and take. 4% with the good oil prices plus the rest of the terms of trade. It looks plausible. And of course, we cannot grow at 8%. 8% will have to do reforms, productivity increasing reforms as energy, labor, educational, which is not what I'm going to talk today, what I talk today, so I will not touch that. So I will stop with saying that the most important thing is that a lot of uncertainty. We do not know, so you need to have a lot of flexibility to sail through these turbulent waters. But Latin America in general and Mexico in particular looks okay. Nothing marvelous, but with a pretty good record of 3.5% inflation, 4% growth, and another 600,000 new employments. I will stop here. Thank you.
Okay, Pedro, thank you very much. So let me open with one question. Looking at the situation in general in the financial world in the US, that is less than in Europe, and I'm talking about the commercial banks. I understand that in Mexico, actually, we already did our job, and the banks are fairly well capitalized. But what do you think is going to happen to credit deepening, meaning do you foresee that the commercial banks are going to start increasing the credit that they are offering to the private sector?
They're going to be very cautious. Everybody is very cautious. You know, Jack, when the exchange rate can go between 11 and 15, you ought to be cautious. You cannot take any bet on anything. And that's really the world we live. And so what you need is flexibility and tight public finances and a governor of the central bank who are absorbing the shocks through exchange rate policy.
Okay.
That's really what it is.
All right. So where do you foresee, the companies increasing the availability of credit
Retain profits.
through
Retain profits.
retain profits, not even through going to the stock market?
You could have, but so far, as you know, last year we had very good 6 months where we were able to place a lot of IPOs. In the second semester with Europe, things deteriorated, and today we don't know. It seems that there is a window opening, it seems, and I hope, and then we'll have some IPOs. But we really don't know. All depends on Europe.
Okay. So now I will open the floor for questions. Who has them? Okay, let's start over there with the microphone. Okay, perfect. Thank you.
Thank you very much for your remarks. You said virtually nothing about the energy sector in Mexico. Having studied U.S.-Mexican energy relations for 20 years, I was originally very optimistic when I heard that the presidential candidates for both PAN and PRI have talked about issuing Pemex stock in a public domestic issue. But then I thought about it, and even if there is considerable demand for long-term investment within Mexico, why would anybody invest in Pemex stock rather than debt? Pemex is obligated and probably will continue to be obligated to provide between 35 and 40% of federal revenues. What return would there be? Or do you think it's just a bad idea, even though it has been originally put forward by Vicente Fox and now by candidates from two major parties?
Well, clearly it will not happen in 2012 because you need some legal and constitutional reforms, which will not happen this year. So it will be down the road. It will not happen in 2012. So in energy, I can only tell you the news for 2012, I think, are three. First, they stabilized the drop in production. Production was coming, with the fall of Cantarell, was really dropping. They stabilized it, and they have managed to stabilize it around 2.5 million barrels per day, which is a low figure for us, but at least they stabilized it. So that's the first news. And the second news is that they stabilized it through larger investment in energy, and they are opening fields. And finally, the last piece is that they created what they call contratos incentivados, incentivized contracts. Well, contracts with incentives, let's say. And they just issued the first three, and there was a big discussion in the Supreme Court, and they have been ruled constitutional. So that's the only thing I can tell you. So for this year, we'll have the first opening of incentivized contracts in the field. Production has stabilized, and prices should be around, give and take, 100. Today, they must be around 110. So that's more or less. So going forward, if there are going to be a reform, this will have to be depend a lot on the election year, and it will happen. It will happen after 2012. It will not happen this year.
Okay. Por favor, could you please say your name and where are you coming from? Okay.
Yes, I'm Dr. Sam Hancock of Emerald Planet and Emerald Planet Television. And Pedro, thank you for being here. I have two questions, but I'll just ask one because I don't want to monopolize the time. But the investment, because of the downturn of the American economy, it's coming back slowly. Mexico is increasing its production capabilities, taking some back from China. What is the investment in green energy and also green technologies in Mexico? My understanding is that the government and the private sector is increasing its focus on environmental quality, and that's a new area for both green jobs and also technology development in Mexico.
Yeah, I will say two things. First, on total investment is coming up around 10%, which is good, both public, private, domestic, and foreign. So the aggregate investment, total investment in Mexico is growing 10%. Second, foreign investment is coming very strongly in light manufacturing, very, very strongly. All what is automobiles, all transportation, automobiles, planes, aeronautical, all these areas are really going fast. In the green part, there are only two major initiatives at the present time. The most important one is on home building. We managed to create around 800,000 homes every new year. That's popular housing. That's for the masses, and they have introduced the green mortgage, and the green mortgage requires that developers put into the developments three things which will characterize the so-called green mortgage, which is first solar, wind, etc. Second, the building requirements for thermo, and third, all the heaters and all this is changing. So this is the first time that we have in the law these requirements, and they're working well. I have 3 clients which are developers. They are some of the big developers in Mexico, and the 3, when this regulation came last year, they have to send people from Mexico to the States, and especially from the northern countries, Sweden, Finland, etc., to learn about these things, and they have teams in place, and it's happening. So I think it's the beginning, nothing spectacular, but we are taking it seriously.
A ver, allá, por favor.
Hello, I'm Diego from an intern from Manat Jones. My question is, elections are coming on July, so what changes would you expect on Mexican economy?
Yeah, well, two time frames. For this year, nothing much. Of course, the election is going to be very important. As you know, the campaigns are just going to start within weeks. Now the 3 major parties have had their candidates, but the election time, is just starting. It's very, very difficult to say. Now, if you want to tell me in which things people will agree and which things they will disagree, I think energy reform will be one area where there will be. I think both the PAN and the PRI candidates will lots more in favor of energy reform than the PRD candidate. But that will be a major thing. In terms of housing, for instance, the 3 will have more or less the same policies. So it's difficult to say. But there are some reforms that have happened in the last 20 years in Mexico that I think that will be very, very difficult to change. One is the independent central bank and the independent monetary policy. Of course, the second is NAFTA and free trade. And the third is the horrible aversion to inflation that the Mexican people have now. We have 3.5% inflation, and if you look carefully at the polls, it remains a concern. People will say, we do not want inflationary policies. And this is something really, really important. So I think the bulk of the discussion is going to center into one thing: how to accelerate growth from 4% to 8%. So 4% is the inertia. We can grow at 4%, give and take, doing nothing, with high oil prices. If oil prices collapse, that will not be so easy. But 4% will be the inertia. The thing is, can we manage to grow like Chile at 7%? Which reforms we'll have to have? And I think that the important thing will have to be in relation to low productivity sectors. which sectors of the Mexican economy have low productivity and which productivity-enhanced reforms should be implemented. That should be my thing.
A ver, Adolia, por favor.
Gracias. Dolia Esteves. I'd like to ask you about telecommunications, the monopoly. The OECD on Monday said that the telecommunications, concretely Grupo Carso Telmex 4, has cost the Mexican economy $25 billion between 2005 and 2009, if I remember correctly the figures. To what extent is this affecting growth in Mexico, this concentration? And what do you think of the decision by COFECO rejecting the alliance between Televisa and UCCEL? Do you think that was the right decision in economic terms?
Yeah. Well, first of all, let me be clear. I'm supposed to be a professional economist, and professional economists love competition. We love competition, and when we opened up the economy, it was because we wanted more competition. And when I was part of the team negotiating NAFTA, what we wanted was to open up. And of course, we had to, and that's politics, no? We had to say, well, can we get NAFTA? Yes, but we were not prepared to open the energy sector, which, by the way, from an economist point of view, was a pity, no? An absolute pity. But, well, that's the realities of the political world. So that would be my first comment. Second comment, I think it is true that where you have high concentration, productivity growth is impaired, and hence it spillovers over the rest of the growth of the economy. That's a well-known fact, especially in the industrialized economies, which are the ones that they have studied more. So I will say that this is a very important topic for the future. In general, I will include Pemex and CFE too, because that's really a monopoly. I mean, in the telecommunications sector, you can say an oligopoly, but you cannot say a monopoly, because the monopoly is 100%. So 100% is oil and electricity. So the government has monopolies. That's the only monopolies in the Mexican economy where they have total control. I will open, I certainly will open. I would prefer to open up and look at the countries that have opened up, and you can see it. You can see the things in two ways, though, and I think it's very important to differentiate. One is from the pure politics point of view, and you say, well, I am right wing or I am left wing, and I am in favor of this or this policy. What I like to center the discussion is not on that, but to center in productivity growth. The only thing that we economists really know is in order to pass from the third world to the first world, you need to increase productivity. The average productivity of the economy has to be increased. And we know perfectly well that growth comes from productivity-enhanced policies. And I think I would put in the sphere for the candidates and for economic policy in the years to come the opening of all the two monopolies, and will also say the reduction of concentration in the oligopolistic sectors, which are several. So I will agree. I agree.
What do you think about the COFECO?
Yeah, I haven't read the thing, and it's too recent. But in principle, I agree with the competition. I will tell you loud and clear, and I have entered to compete in sectors that were highly concentrated, like airlines. Our fund invested in one of them, and you suffer when you are the small guy there. But if you have lower cost, high productivity growth, you can compete, and I love that. And I think that enhances entrepreneurship, etc. That's what we want. Yes.
A ver, aquí. Thank you.
Well, good morning, everyone. My name is Marian Joseph. I'm coming from the office of Pillsbury of Pillsbury Law. And I had a question regarding the TPP negotiations and the Trans-Pacific Partnership negotiations that are currently ongoing. I wanted to ask how Mexico feels about that, or your group in particular. Would you use the TPP negotiations to strengthen or better NAFTA, or do you see it as completely irrelevant?
My God, I really do not know much about it, to tell you the truth. This is a very specific question about the trade negotiation, and I do not know the details. But let me tell you the general principle. The general principle is the following: that we always prefer to negotiate trade accords than not to negotiate trade accords. For instance, Mexico has the second largest number of trade accords in the world. The largest is, by the way, Chile. No? Chile is always ahead of everyone else in Latin America in this respect, and in many others. We come second, and I think it's very important. For instance, 2 years ago, Brazil had the offering of negotiating a free trade agreement with Mexico, and Mexico decided to postpone it. I think it was a wrong decision. The Mexicans were saying, the agricultural sector in Brazil is too competitive, et cetera, and I think that's the old way of solving problems, where what you have to say is, okay, let's negotiate, let's have a good negotiation where the rule of law can imperil and not the decision of politicians, and let's have a framework of long-term planning so that our productive sectors have the right incentives to invest and to prosper and to bring technologies, et cetera, et cetera. So that will be my principle. Sorry that I do not know the details.
Thank you very much, sir.
Right. First you, and then both of you. Okay. Sí, por allá.
¿Puedes tomar como dos más?
Sí.
Sí.
A las 11, ¿no?
Sí.
Thank you very much. José Díaz Briceño with Reforma newspaper from Mexico. The question here is, what is your explanation about the apparent paradox of having, you mentioned a relatively good economic recovery and high violence rates in some areas of the country?
High?
Violence rates.
Yeah.
How do you explain that apparent paradox?
I think they are not linked. They are not linked at all. The violence comes from the origin of the problem. Everybody knows what's the origin of the problem. The origin of the problem is the huge consumption of drugs in the U.S., which, by the way, is the only consumption commodity that didn't fall in 2009, which is unbelievable. But anyhow, so this is really a problem, and what we want is that the U.S. takes much more attention to it. And, remember when, the 70s, when everybody smoked, and the U.S. started, a policy of how terrible it was for your health, et cetera, and look how much it diminished. Well, we hope they can use the cigarette strategy to the consumption of drugs, and this should be the most important thing. So that's one thing. The second thing is that in Mexico the violence have gone up. It's true. It has gone up in every measure that you have of violence has gone up. However, it is also true that it's very concentrated. It's very concentrated in, thanks God, in few spots. Is not everywhere. No. Now, what a lot of states have started learning is that the states that are more secure are attracting lots more investment. And that's a tremendous incentive for the local politicians, governors and mayors, to do something meaningful and important in terms of diminishing in a substantial way violence. And there are some, I can give you some examples of states and cities that were very secure, then very violent, and they are secure again. One that comes to mind is Aguascalientes. Aguascalientes was an extremely secure place. Then it had like 6 or 7 years of bad stuff, kidnappings, horrible things. And now again, it's secure. I was there a month ago, and you could feel again this thing. And 3 weeks after I was there, comes the announcement of Nissan that is doubling the plant in Mexico, in Aguascalientes. No wonder, no? With tremendous violence, I bet that the plant will not have been established in Aguascalientes. So, yes, there is a correlation between investment and violence. Yeah, that's true, but not between growth and violence.
Okay, now Margaret, and then we'll go to the other two questions, and then we're going to have to finish because I don't see that we have much more time. So Margaret, please. Sorry.
Thank you. You've addressed my original question. I'm Margaret Daly Hayes at Georgetown University, and but you have raised another question in this discussion, and that is, what are the sectors and what does Mexico need to do in terms of policies to improve productivity? Where would you address your first, second, third initiatives in order to improve productivity?
Well, if you rank the sectors of lower productivity, you will not be surprised. It will be oil, gas, mail. You start putting the things where you have monopolies. So that's the first. And they're always very low productivity growth. But you go on to other sectors of the economy that are concentrated. So I will say, and then of services. And that's another area where we have low productivity. The low productivity, for instance, in basic education. And that's a tough one. That's a tough one. And you can measure it by the PISA measurements. You have different types of measurement of productivity, and the productivity is very low in those sectors, and sectors that are highly concentrated. So you have to look carefully at it. Now, I will say that the thing is, Margaret, that there is not a rule of thumb that you can put across the board of full opening or gradual opening. It has to be case by case. But I will say that the key in these things is opening. Now, how fast, how gradual, that's a different ballgame. You will have to ask the specific in each sector. But I will say, I agree with the same question, Dolly. We will have to say, okay, which are the sectors of low productivity growth? And if you look at these sectors, they are highly correlated with either monopolies or high concentration. And then you will have to open up. And I think that's a policy in the agenda.
Okay.
By the way, one very important sector, which we will have to look carefully, I think, and enhance for the future, is science and technology. This is something, we really want to have to move away from the low value-added maquiladoras to the high value-added things, and Mexico is moving that way. For instance, in the building of, I give you 2 or 3 examples. Querétaro attracted the Canadians to build the cluster in aeronautics the Canadians said, okay, we are willing to go there, and you need to provide us with three things. An airport, they have the airport there. Land, they had industrial park there. And a continued flow of graduates of aeronautical engineering for the years 2010, 11, 12, 13, 14. What a beauty. And Querétaro moved and won. They created a university by the airport. They are literally there, next door to the industrial park. And Bombardier decided to move to Querétaro. And so the construction of the Lear 85, we got it. And I attended the graduation of the second generation of 35 aeronautical engineers. Well, that's exactly what we need, no? Exactly the type of thing. And that's where you need also lots more communications between the private sector and the universities. No, and that's a good example of where to go. And if you see what the doubling of the Nissan plant in Aguascalientes is requiring from the University of Aguascalientes targets of the generation of engineering, et cetera, et cetera.
Okay, were the questions over there? Okay, why don't both of you ask the questions first, and then I'll ask Pedro to answer.
My name is Elizabeth Hearn. I'm from the Department of Treasury. I was also going to ask about energy reform. There seems to be a lot of confusion between Pemex and CENER and the Hydrocarbons Commission as to approvals, and especially when you're talking about opening it up and increasing private business involvement in Pemex. Do you think that this will be something that the three different organizations can work out on their own, or do you think that there will need to be further political reforms made? And also, where do you see the candidates sort of leaning as these campaigns do develop?
Yeah, I would. Yeah. Okay.
I'm Alec Watson from Hills and Company. Mexico is obviously a great free trading nation, as you have pointed out, Dr. Aspe, but some of your major partners, such as Brazil, seem to be devolving back into some sort of protectionism, particularly in the very successful automotive sector. We've seen some reports this last week that the Brazilians are threatening even to cancel their trade agreement with Mexico. I wonder if you had any comments on how Mexico can deal with an important issue like that.
Let me start with this last question first. Rough numbers, I like rough numbers, no? Mexico is exported $1 billion per day. That's, no? We export more than all the rest of Latin America combined, okay, in manufacturing. And so what we really need is to enhance the treaties. And the most important country, politically, economically, the whole thing in Latin America is Brazil. That's why when President Lula first said we should enter negotiations into a free trade agreement, Mexico, in my view, should have grasped it and said yes, and sit down with them and do an agreement. Mexico said not yet. It was Mexico. So now the Brazilians, if they start saying, well, you are exporting too many cars, etc., you will say, well, blame the Brazilians. Well, blame the Brazilians and blame us, because we didn't grasp the opportunity. We were offered the opportunity by President Lula, and we decided not to pursue it because certain sectors of the Mexican private sector said, oh, we're not ready for, and it was especially in the agricultural sector, and I think was a big mistake. So I don't blame the Brazilians. You know, I wish they don't do it, but I think we are all to blame. So hopefully this action of the Brazilians will force us to sit down and to say, okay, let's do a deal. You know, the largest investment, the largest singular investment in Mexico, foreign investment, is the investment of Braskem, the petrochemical company from Brazil, in Mexico. No, we should be working lots more with them. So I will not blame only the Brazilians. Huh? Okay, let me go back to the energy reform. Yes, there is a need to clarify what's the authority and what's the doer. The doer is Pemex, but Pemex is not the authority. The authority will have to be the CENER and the Ministry of Energy. I fully agree that you need further clarification in the law that is not there yet. And I think before any reform, that will have to be done. Now, as part of that reform, I think an opening of the sector will be highly desirable. It will not be to go the way of privatization, but the way of joint ventures, like Fernando Henrique Cardoso did it in Brazil. I think we should start opening up to joint investments, joint ventures in the energy sector. Yes, will that be something that the candidates will discuss? For sure. And I think that the position has been very, very clear in the PRI and PAN candidates that are in favor of reforms in the energy sector. Of course, God is in the details. We'll have to see the details. But in principle, they are in favor of reforms.
Okay, so very well. I guess, Andrew, is that right? Or I have one more question.
Up to you.
But you told me that. Okay, so one more question. Bueno, a ver. Primero allá y luego Dolia, para que cierres las dos juntas, both together. Okay?
My name is Maria Garcia. I'm with Notimex. Dr. Aspe, 2 couples ago, the Washington Times newspaper said that there is concerns in the United States if the PRI wins the elections because they will allow to the narco-traffickers to semi-autonomous operation. What is your views in that?
Before, Dolia de una vez también.
Very quick question. Do you have any political ambitions in the future? There is the polls indicate that your party might come back this year. And I was just wondering if you know, enjoying your time in the private sector, or will you be considering a position if it's your ask to come back? Since you seem to have a lot to contribute to the situation in Mexico.
Let me tell you, Dolia, I'm very happy in the private sector, and I serve my time. I enjoy it a lot. I was there for almost 20 years. And I'm really enjoying my time in the private sector. I enjoy doing new things now from the private sector. I give you one example of innovations that we in the private sector can do. For instance, out of the reforms of the 80s, the Afores have all the resources to finance. So which things are they going to finance? That's for us in the private sector to do the schemes of which things can be constructed so that they can finance. And I give you 2 examples. One, for instance, a water treatment plant. A water treatment plant in the U.S. is typically financed at a 20 to 30-year tenure. Let's say 20-year tenure. And in Mexico, it used to be true that we had to finance it at a 2-year tenure. So it was impossible for the municipalities to finance. This is a problem of public policy, yes, but it can be solved from the private sector. Why? Because what you need to say is, okay, how do I separate the risk of the plant from the risk of the municipality? How do I segregate these risks, and how do I conform this so that it can be financed in the market without having the spillover of a municipality problem. And this has been solved in the US since the 60s and 70s, and has been solved in the northern countries of Europe in an incredible way. But we have to study that and then bring it to Mexico and then tropicalize it. And that's the thing that I love to do. That's one example. Then another one is the following. How do you finance real estate? Real estate, as you know, is if you take apart human capital, which obviously is the most important capital of a country, but if you take physical capital, the most important capital is real estate. And how is it financed? Let's say, for instance, let's take shopping malls, commercial, industrial parks, etc. And in Mexico, we didn't have a way to finance it. But the US, in the 60s, created the so-called real estate investment trusts, the REITs. And the REITs have a special scheme that work extremely well to finance this type of things. Well, we work in our office for almost 2 years, trying to see how to within the law has been published, how to put it together, to take advantage of this thing, and we were able to place it last year in both the Mexican and international markets. And now we hopefully we will do 2 or 3 more. So these are the type of things where reforms that were done many years ago have matured now, and now is the challenge to the private sector, and not always of the government, but the private sector to do part of the innovation and to compete. So, for instance, we compete there. We are, a small broker-dealer, but we compete, and we compete. That will say it used to be a sector which was highly concentrated, not anymore. Not anymore. And some of us have, entered and have grabbed market share in these niches. Okay, so I'm very happy. My answer is no. I'm very happy. I'm very happy in the private sector and doing what I do.
Okay, ¿la otra pregunta?
¿De cuál era?
Que si el PRI sube.
Sí. Look, let me give you my. I don't have I'm not a professional in talking about drugs, but let me give you my citizen view of Mexico. I think President Calderon deserves all the credit for facing the narco problems, which was growing at a horrible rate, and I think he deserves praise for that. And I really, I am as a citizen thankful that the president faced down and said, "This is it. We have to face it, and this is a present and clear danger." That I agree fully. And now, what also I think is important is to have a very enlightened discussion of what the right strategy to fight this thing. I give you one example. The so-called war on drugs in the US has been a total failure. Why a total failure? Well, because you have spent billions of dollars and consumption has increased by 4 times in 20 years, which is unbelievable. So by any definition, that war has been lost. And the first thing you have to, to correct things, the first thing is to do a diagnosis and say, well, we won or we have lost. And clearly the US have lost. And I think we are at the present time and at the crossroads to say, okay, we let them increase a lot, we face them down, now what we are going to do, and what strategy we are going to follow going forward. And that's something typically that I wish could be discussed in the campaign, and then could be discussed in the interreño between the election day and the taking of the office. These are 5 months which are key to understand and to have a specific strategy that you can explain to people okay, this is the thing, this is how we see the problem, these are our resources, etc. One last thing where I think that President Calderon deserves praise, which is something that we knew that we lack, but all the intents were very small, and finally President Calderon deserves credit on this, which is the creation of the federal police. Remember, let's go back many years ago, and if you have a security problem, the only way to face it was with the army. Why? Because we didn't have a federal police. And now we have trained 45,000 men. It's true that we need 60. No, that's the figure that those who know mention. I'm not a professional on this. President Calderon will inherit a force that is professional. And I think that deserves a lot of credit. And hopefully, the new government of Mexico will build upon that so that we don't have to start all over again. So to train 45,000 men is impressive. I met with the commissioner of the Royal Mounted Police, which had been training some of the police force, and I was in Canada, invited by them to explain to people like me who are not professionals on these things how they are training the thing. And I was asking them how good, how are the exams, how they are doing. And he said, well, clearly you will have 45 men well trained to serve your country. And I think this is very important. Now, the strategy that will have the new government that comes out of the elections of July will have to build upon this, but it's wonderful that they say we have a police force, we will not have to wait 4 or 5 years. And I think, being neutral, trying to be neutral and not partisan at all, I think President Calderon deserves really praise for these two things, facing the narco and building up the federal police. I think this is a legacy that for the next one will be very important.
Bueno,
thank you very much.
So thank you very much.